The dollar flies and gold cries, an opportunity in the making. What's up, everybody? My name is Michael Silva. In today's video, we're going to be discussing the potential opportunity that is forming here since the FOMC recently came out and made their statement. It was a little bit more hawkish than usual. We're going to be mapping out some key levels in gold that I believe to be a very big opportunity. So let's go ahead and hop into today's episode. Welcome back. So yes, the Federal Reserve, quote unquote, taper talk kept the markets really on edge today. It actually sent the Dow Jones to have its worst week in 8 months. It looks like a roller coaster ride. I swear, if you look at that index and you look at the chart, it looks like you're ticking up slowly and then all of a sudden it kind of is spilling over. Meanwhile, also commodities have taken a big hit, including gold. It suffered the biggest weekly drop since March 2020. Now, we all know what happened after that big drop in March 2020. We saw miners almost rip 300% and we saw gold take off too. That's why we're talking about the opportunity to come. The Fed, they alerted the risk of higher inflation. Now they're saying, okay, in 2023, we see potentially 2 interest rate hikes. Okay, I mean, that's a while from now. So how much really confidence you have in listening to this? Well, Fed Jim Bullard came out and he says that he sees his first interest rate hike coming as soon as 2022. That also sent the market in kind of a little tailspin there where we saw more volatility pick up. Why are we listening to him? He doesn't have a vote. I don't really know. You know, all kinds of weird stuff is going on right now. To be quite honest, we're going to break it down looking at some charts. The dollar, here is what I mean by the dollar has flies. The dollar has taken off completely. If you watch my daily market briefs, we've been looking for this type of move. Meanwhile, you can see the S&P 500 kind of rolling itself over. When you see a big spike in the dollar like that, we can take a look at the weekly time frame. That is not the greatest for commodities. However, when you get big spikes, that presents big opportunity. So we're looking at a weekly chart. This could be potentially an inverse head and shoulders. We have a neckline right there. If it breaks out, we can potentially even go up higher, 96 to 98 as a target for that inverse head and shoulders. However, we are running into the neckline that can also be held as an area of resistance, which could mean it's a good buying opportunity for the metals. Now, from a bearish perspective, we're looking at a chart of gold. This right here, this pattern is known as an ascending broadening wedge, and typically it moves up in this channel, it broadens out and then can break down. You can see that happen in 29, 10, 11, then we broke down, we created a base. This right here is an accumulation phase before we move into a markup phase. Now, what is interesting is when the dollar was breaking down, you can see that the gold really taken off here, and you can see here, in March 20, we had that spike in the dollar, and then we started dragging lower, and that really started pressing gold to all-time highs, and now we're starting to see a very similar type pattern. Okay, so what does this mean? Well, we got to keep an eye on the dollar. If the dollar heads higher, we might head a little bit lower there in gold. How low can we go? Well, we're going to be mapping out some key levels because those are periods of time where we can accumulate more of the precious metals or more of the miners. Now, if we start breaking down through this previous resistance, now it's acting as support around 90, 89.50, that level right there. Well, then the dollar can break down significantly more. So it's all about the dollar right here. From a bullish perspective, though, you can actually look at this not as a ascending broadening wedge, but perhaps you can look at it as a descending broadening wedge. So if you take a look at this right here, this is more of a bullish perspective. This would say, okay, yeah, maybe with the dollar spikes up a little bit more. Then we come tag a little bit lower of this channel. Hopefully 1650 can hold this support, but eventually the dollar comes back down, which I believe that the dollar will head lower throughout time. It's already in a bearish trend through the course of history. Then that means that this can break down and gold can go attack its key levels. You got to understand, you know, there's a lot of talk about these commodity super cycles, but when it comes to super cycles, there's going to be large movements up and down, and you got to be able to withstand those type of movements in this market. So you got to ask yourself, with the debt increasing very, very rapidly by the day, okay, this is US debt clock, and then you batch that in with CPI, okay, inflation numbers coming in higher than expected, okay, is that going to continue? You can look at the rate of change right here, this big spike up on the 12-month rate of change. The last time we've seen moves like this is really looking back to the 70s, and that was a stagflationary environment. Key levels in gold right here that I'm looking at a monthly time frame. I'm a long time holder, but I want to be able to pick up or accumulate at certain key levels. So the first level here is right here at the March drawdown right here. You can see here it's right at around 1650 to 1700. So the monthly candle does not look that great. The PMO does look like it's crossing over, so it looks like we may be able to come tag this area. That would be a good area to accumulate, okay? Now, if it heads lower, we have around 1550 to 1600. Then if it goes even lower, which I think this would be an amazing opportunity if it ever came down here to 1450. And then the last level that I would say would be a very strong accumulation. I don't see it coming down here, but if it does, awesome. You can see previous resistance, that accumulation phase right here before he went into a markup right around 1350. But you might be thinking, okay, Mike, but what if it doesn't come down to those levels? Okay, well, we're in this kind of consolidation phase here, really this drawdown since this peak right here. Well, if we start breaking above these, the high of this previous month, and the high was 1919, so about 1920. If we can start getting the monthly close above that I would also start adding to my positions as well, because that does make sense from a technical perspective that we start breaking out from those levels. Today's episode was brought to you in partnership with Blue Lagoon Resources. Blue Lagoon Resources is a mineral exploration company focused on its high-grade gold projects, the past-producing Dome Mountain mine. They trade on the Canadian Stock Exchange as well as the United States market under ticker symbol BLAGF. Rana Vig is the CEO and director, and he has over 30 years of business experience. He has been involved in several publicly traded companies since 2010, first serving as the president of an Idaho gold and copper focused exploration company, and then as president and chairman of a TSX senior board listed uranium focused company with one of the largest uranium assets in the world located in Sweden. In 2018, he became the chief executive of Lead Ventures Incorporated, overseeing and executing the acquisition and $5 billion reverse takeover of Curaleaf Holdings Incorporated, ticker symbol CURA, and that raised $520 million, making it the largest Canadian cannabis financing in history. Shortly after that, he took the helm at Rockbridge Resources, which he successfully restructured by acquiring through a reverse takeover the $2 billion plus Harvest Health and Recreation, which closed a $300 million financing, making it the third largest cannabis financing of 2018. The company is within spitting distance of potentially commencing gold production. It's one of the only companies on the planet right now that are about to go produce gold so soon. In recent news, they did kick off their 2021 Phase 2 drill program on its Dome Mountain Gold project. 90% of their property has never been drilled, and they just began the largest drilling program in company history. Now, the Dome Mountain project, the company could announce production soon. Drilling holes could deliver potential big results here, so it's something to watch. The company's current market cap is $33 million. The Dome Mountain mine site has seen $28 million spent the last 12 years, as well as $40 million previously spent by Timmins and Noranda for mine permitting, infrastructure, construction, underground development, plus exploration drilling. Rana Vig, who we just recently discussed, the founder and CEO and director of Blue Lagoon Resources, was able to purchase it for 27 million Canadian dollars in a share-only, no hard cash deal. So if you notice, the company's market cap today is half of what was spent on the Dome Mountain to date. The drive to the mine site, which is very important, can be accessed all year round and is just a short 50-minute drive from the town of Smithers, located in northwestern British Columbia. So as previously discussed, 90% of the project, it has never ever been explored. So the potential is in the drilling. This is important since they began drilling in January 11, 2021, so the timing could be ideal now. They just started their second drill program. They've identified 15 high-grade gold veins, and the past-producing mine is based only on one of the 15. When Rana Vig negotiated for this property, he knew that because $68 million was already spent, Blue Lagoon Resources, BLAGF, would have minimal $1.5 million expenses on it since it was nearly production ready. So the company hasn't taken on debts or diluted shareholders aggressively, and here it is at the finish line. So the potential is very big. In fact, because of this, Rain and Vig, who already owned about 20% of the outstanding shares, along with his associates and family members, added more. He added 1 million shares to his holdings of Blue Lagoon, and currently with the more than 5 million in treasury and no debt, they have more than 20 people working at the site in a combined effort to complete this year the required mining permit amendments. So the next major catalyst is that the company is in the midst of a 20,000 meter drill program, the largest ever conducted on this property. When we pull open a chart of ticker symbol BLAGF, Blue Lagoon Resources, I'm looking on the weekly time frame, and you can see right now we're closed at around 52 cents, which is really right where it started trading on the week of September 25th, 2020. So this could be a potentially good entry point. Just note that there are many risks involved within the gold exploration sector, as well as many other sectors. So please do your research to see if this is something that would fit your investment needs. There are links in the description below so you can go to their website and learn more information and download their complete investor's deck. That's all I got for you on today's episode, everybody. Have a wonderful day.